Hello again, everybody. Doing here from DRFX Forex Swing Trading. Taking a look at another recent trade that was made today. This took place on Aussie Swiss franc. We were basically trading within the context of this large pennant consolidation that has been formed on the daily chart. Following the recent rally at the support boundary, the market was expected to continue the movement towards the resistance as it started to break this downtrend line. Taking a closer look, you can see that the market provided a strong bullish candlestick formation known as a morning star to break the downtrend line and indicate that we're going to be continuing the movement towards the resistance boundary. So with this strong candle and expected rally, we decided to trade this setup using the 4-hour chart with the following setup. The stop loss was placed below the candlestick formation here, and this was the candlestick formation that led to the bull candle that we just saw on the daily chart. So the stop loss was placed below this area here, just above the resistance boundary of the pennant that led to this breakout. And our entry took place at the close of this candle, which coincided with the close of the daily candle. So the entry took place at 72.72, stop loss at 71.83, and our target was set for 0.7382 with an expected target of 110 pips. And taking a look at the current chart, you can see that the market rallied and took us to the target, providing us with a gain of 108 pips. So the market rallied as expected in response to this bullish candlestick formation within the context of the expected rally towards the resistance following the recent rally at support. So a short trade, a quick trade, meeting our 100 pip minimum for trading these types of movements in the market. And what I'm going to point out now is that the reason that we exit at this area has to do with what takes place generally when the market approaches these major resistance and support boundaries. Now taking a look at the 4-hour chart, what you'll notice is that the market in hitting our limit order at 73.82 actually pulled back sharply. And this is what you will see. This is what caused this large wick with this candlestick, indicating that as soon as the market hit that price, there was an immediate, very strong momentum of opposing selling pressure to push the price back down. What this is telling us is that the market, or there were several other players in the market that also exited their trade at this area. Now, one of the reasons that we generally try to exit just above, just within these major boundaries is that there's generally a buildup of opposing positions that are expecting, that are getting ready to trade the market with expectation that it's gonna U-turn at this area and then head back towards the other side of the boundary. So the buildup of those positions is generally why you see a slowdown in momentum as the market approaches this area, which is why it's generally a good idea to exit just above, just inside of that boundary. Even though even though the market sometimes, or in most cases, will actually hit the boundary, there are times when it will actually start to move sideways and then U-turn sharply and head towards the other side of the boundary. So there are times that the market does not necessarily hit the boundary itself before U-turning to head in the opposite direction. So that is why we always try to exit just inside of the boundary, because of the tendency of the market to do this from time to time. So the buildup of opposing selling pressure and the occasional U-turn that takes place just inside of the boundary are the two reasons why we decided to exit here. And as you can see from this spike, there are several other players in the market that had the same idea and were aware of what actually takes place at this area. So a good trade, as I said, a strong trade, very quick, a strong gain of 108 pips. Now, what is likely to take place from here on is that Having formed this uptrend line with this recent rally, we could actually see if the market is going to U-turn and take us back to the support boundary, then this is the barrier that's going to be broken. This uptrend line, a break of this uptrend line is going to be the first thing, or the major signal to indicate the start of the movement back down. If that does not take place and the market lingers in this area for a very long time, we could actually see the market start to break out above the resistance boundary of this large pennant consolidation. So we could actually see a strong movement in favor of the Aussie dollar that carries us towards this area here at least. Given the size of the consolidation, that breakout would last for a very long time. So the key to determining what the ultimate direction of this currency pair is going to be based on what takes place at this area here. So over the course of the next couple of days and perhaps couple of weeks, we'd like to see the market provide a setup that leads to a breakout, either bearish or bullish. So once we get a strong setup and a strong signal in either direction, then we can take advantage of that move. If it's a breakout, the move should be pretty fast, and a target of 200 pips should be possible. Similarly, given the large distance between support and resistance, once we get a strong setup and a strong signal that is close enough to this area here, then we could comfortably target a 200 pip gain as well. So either way, there are trading possibilities, and once we get a strong signal and a strong setup in either direction, we can add to the recent trading gain that we just made on this pair.